All right, so we knew an undercut was definitely a possibility. Many ICLs do form as an undercut, maybe as many as 50%. One of the things that I have been expecting, this often occurs during an undercut on the indexes. You'll get a divergence in the McClellan oscillator. You can see we have a divergence forming here. It's just a sign that the underlying breadth in the market is starting to firm up, even though the indexes are making lower lows. The internal breadth of the market is not making lower lows. So this happens at most intermediate cycle lows. You can see here in August at the this also had three legs, a first wave down, a bounce, and then a second wave down, and we got that divergence in the McClellan oscillator at that bottom. We also had a divergence at the March bottom. You can see the divergence here in the McClellan oscillator. Again, three legs down. First leg here, we got a little bounce, and then a second deeper move down. And the internal breadth of the market did not confirm that second move down. There's a very slight divergence here at the election night lows. So, again, we got that same divergence. So, that doesn't mean that we have to bottom or that we did bottom today. We can still go lower. We're about 1 or 2% from tagging the 200-day moving average, so that's definitely a possibility. I'll shorten the screen up a little bit so you can see this a little more clearly. You can see the divergence already forming on the McClellan oscillator, and then you can see we're about 25, 30 points, something like that, from the 40 points, I guess, from the 200-day moving average. So, very possible that we could tag that. Not sure we're going to be down again tomorrow. The short-term sentiment on the Dow is at 1% bulls. So that's pretty extreme. It may be hard to push the market down again tomorrow. So we may have some kind of an up day tomorrow. If we were to get a very powerful up day, something that brings us back up above 2650, then at that point, that would be all the confirmation I would need to confirm to me that we are in a final bottoming pattern. I've seen that kind of bottom happen many times in the past, where you start to get these big volatile swings back and forth. Let me draw in kind of what I'm talking about here. So if we were to get something that looks similar to this, where we just these big swings back and forth, that is a sign of a bottom forming. The bulls, they just always win this battle eventually. We're 24 weeks into this intermediate cycle. It's just too late to be getting super bearish. Sentiment is extreme. I published all the appropriate sentiment levels in tonight's report, if you want to see those. This is one thing I'm going to look for tomorrow. With sentiment in the Dow at 1% bulls, there's probably just not a lot of selling pressure left. So, I'm really not expecting a big gap down again tomorrow. I'm expecting some kind of a bounce from that extreme sentiment reading. If it is a big bounce, very similar to what happened earlier in the week on Tuesday, then I would say we're forming one of these volatile back and forth bottoming patterns. If it's just a weak bounce, then I'd say the odds are good we're going to go test that, at least test that 200-day moving average before we bottom. But at 24 weeks, it's just we're just too deep into this intermediate cycle to be getting crazy bearish. Moving on to the weekly charts, you can see we've come down to a tag oversold. Again, this is just not a great time to be getting bearish and expecting, just more and more downside. You can see it just doesn't pay to get bearish when the oscillators are oversold. Even during the 7-year cycle low back in early 2016, it just didn't pay to get bearish when these oscillators got oversold. So now I'm going to look at a couple charts and I'm going to show you what has happened in the past. So, I'm sure everybody remembers the election night reversal in gold, and then, just for 5 or 6 weeks here, we just kept going lower and lower and lower. And, what happened was everybody panicked right here at the bottom. They became convinced that gold was going below the 2015 low. It was going to go below $1,000. This is when people cancel their subscription, and this is what happens. The vast majority of people just are unable to keep their cool during these exceptionally hard corrections, and they happen from time to time. But panicking during sell-offs just never made anybody any money. The people that panicked, sold, canceled, all they did was they missed this rally. And this was the rally that we made back all of the losses from being too early on this trade. And now, these people, I'm sure, have probably not made anything. We've gone from being up 50% at this bottom to when we exited back here, we were up 272%. So, the people that panicked and sold here, all they did was miss a wonderful opportunity to produce some incredible gains over the next year. And now I've moved over to the energy trades, and so the same thing. We entered an energy trade right in here, and then the market just kept going down much further than we expected. And if we had listened to the typical dumb money traders panicking, telling me we needed to sell and try and salvage something, kept telling people the time to sell is not during oversold conditions, not when people are panicking. The time to sell is when the market turns back up and the oscillators move back up to oversold conditions. That's what we did. So instead of just locking in a gigantic loss right here, we just followed the plan. We waited for the market to turn back up. We waited for the weekly oscillators to cycle back up to overbought, and we ended up selling up here. And instead of a gigantic loss, we actually had a modest profit in this trade. So the moral is just you're never going to make any money by panicking, and selling into panics and into oversold conditions is basically just a surefire way to lose money. The time to sell is at intermediate tops, not at intermediate bottoms. And the time to sell stock market positions will be once this intermediate decline is over and the next intermediate rally begins. That's the point at which we want to sell positions. Now, my view is that all of the years of QE, I think this has to result in a parabolic bubble. So my opinion is that this is the correction that will initiate the final parabolic bubble phase. And if that's correct, then we're going to slingshot out of this bottom and we're going to go crazy to the upside over the next 3 or 4 months. That'll give us the parabolic blow off top, and then we will start, a multi-month or year bear market as the bubble collapses. So in my opinion, I think we are right here. Now this of course is a graph of Bitcoin, or the ETF that tracked it. My opinion is that we're in this correction right here. This was about a 50% pullback. This even fooled me. I thought this was the top of the bubble, but it wasn't the top. It was the final pullback that created the extreme negative sentiment that sets the stage for the final parabolic bubble phase into the top. And I believe this is where we're at in the stock market. We're setting that final correction that gets everybody on the wrong side of the market, and then that's the fuel that drives the final parabolic move. If we don't get this kind of a move during the next intermediate cycle, if the rally is more leisurely, and instead of just blasting off and going crazy for like 3, maybe 4 months, instead we get more of a leisurely move up, and we make new highs, but not the parabolic type move, then I'm going to have to change my opinion and say we really are in a multi-decade new bull market that still has another 10 years to run. I don't think that's the case. I think all these years of QE have to have consequences, and the consequences should be something that looks like this, and not something that rallies for 20 years out of that 2009 bottom. So that's my opinion. I think we're setting up for one of these rather than another 10 years of just grinding higher, like some analysts are calling for. Now, I may be wrong. That it's possible that we are in a multi-year, multi-decade bull market, and I think the next intermediate cycle will tell us. If we just go up, gradually, and the rally lasts for 15 or 20 weeks, then I would have to admit I'm wrong, and we are in a multi-decade new secular bull market. If not, if we do something like this, like what Bitcoin did, then I'm going to be right, and all the years of QE are going to result in another bubble, and then at that point I would be ready to be bearish on the stock market.